Hello, good morning. You're watching Bandhan now on ET Now with me, Modi UAE, along with me, Shell D'Souza as well. Shell, a very good morning to you as well. And markets have recovered from the day's lowest point, but broader markets still, like yesterday, are underperforming the benchmark indices.
Absolutely, the carnage in broader markets continues. Actually, Vinny, a very good morning to you. Now a great morning coming in for broader market holders. Also, certain stocks which are actually sulking in trade today. But as of now, if you look at the market smart recovery, that's what the benchmark indices have posted near the day's highest point, both for the Nifty as well as for the Sensex. You have the Nifty Bank that's outperforming the benchmark indices once again. As you can see it on your screen, upwards of about 1% is what Nifty Bank is trading. Just to take note of the flash on the bottom of your screen, you have MCX that's come out with a statement. Remember, they've been giving timely updates since morning that they're facing some technical issues. The team is working to resolve it. It looks like they haven't been able to resolve it yet because the market was supposed to open at 9, then at 10, 11. Now the recent update that we're getting is that tentatively they are looking to open the market at 1 p.m. So that's the latest that's coming in on MCX front, and the stock is subdued in trade, but nevertheless, yes, the trading to resume only at 1 p.m. tentatively is what for now that MCX has actually informed everyone. Okay, looking at the rest of the market then and the list of gainers and losers in trade today, Hindalco definitely is one of the top losers coming in today's trading session on back of Novelis' performance also, and the commentaries that is coming in on that particular front. 12% downtick coming in for Hindalco, top loser on the Nifty, followed by Grasim, HCL Tech, Adani Enterprises, while on the flip side we have Coal India, UPL, ICICI Bank, NTPC as well as Axis Bank holding the fort, seeing good strength in trade today. Talking about sectoral indices, given the fact that we've seen a sharp downtick coming in on Hindalco in particular. So you have the metal index, that is the top sectoral loser in trade. Realty is the other one. Power also taking it a bit easy. While on the flip side is the PSU Bank index ruling the charts once again, along with oil and gas. So that's the way how the markets are looking like at this point in time. But Winnie, one particular stock that has to be in focus, it has to be ITC. We've seen what's happened in that particular counter over the last few trading sessions, a sharp knock coming in also for the stock. And one of the primary reasons for this downtick has to be the news flow that BAT, which is the majority stakeholder in ITC, is looking to offload some stake.
Absolutely, but Cheryl, I think this is a bit of an overreaction. Why? Because BAT had already mentioned before that, they will be reducing stake. Right now also they've said that they'll be reducing from 29% what they're holding to 25%. 25% is what they will be holding no matter what. This is a strategic investment for them, not just a financial investment, and that is what the word came in from the BAT's management as well, CEO, when they were talking as well. So yes, that's the word that came in. Now, when you're looking at it currently, this 4% stake which would happen is around a $2.5 billion stake sale around this. It values at $2.5 billion. Let's not forget, ITC has seen a very good run up in terms of their business-wise as well, the consumption side that they've been focusing on. BAT also highlighted that this is not anything in terms of a worry on the business front that they're selling the stake. It is because BAT has to reduce some bit of their stake, I beg your pardon, some bit of the debt, and they are facing some bit of a concern in terms of, decline in cigarette volumes. So that was a bit of an issue and they want to reduce their debt. That is the factor that one should factor in. Analysts also saying that this is just a knee-jerk reaction that is coming in. This is nothing new. This is an uncalled for pressure that is coming in on ITC stock, because overall as a business performance, ITC is seeing a strong growth in the FMCG consumption side as well. And yes, that's the word that is mainly actually coming in as well. Many expected that this 3 to 4% stake sale that may happen will be easily absorbed by the market, is what analysts are highlighting as well, Cheryl. But let's also listen in to what Ajay had to say in terms of his view for ITC as well, what he believes also, how this is actually shaping up for ITC.
As part of that debt reduction strategy, they may pare some debt. The highlight is that they would like to retain 25%. And a company which is flourishing so well on the numbers front, 3.5–4% stake is what they'll pare, and that's why they have appointed bankers, and they'll retain the majority stake. Also, if you look at the way the company is transforming the consumer end of the business, particularly FMCG business, margin expanding, business is becoming bigger, hotel business is doing very well, the entire sector in India is doing very well. So if any kind of a weakness which comes in because of this 3.5-4% stake coming into the market, most of the experts we are speaking with are actually looking at buying into that particular stock. In fact, they say that this will get absorbed, and going forward the company will come back, and this is an overreaction which we saw in the last 2 days. In fact, just today also, if you look at ITC, it is trading in the green.
All right, so that's the take coming from Ajay as well when it comes to ITC, trying to actually make sense of this news flow. The fact being that BAT has debt concerns, wants to actually pair the stake, rather monetize the stake in ITC. 29% is what they hold, and they want to reduce it by just 4%. So is this an overreaction? Should this cause a concern? How are the fundamentals of ITC? Should you be looking at the fundamentals or just trade on this news-based information? Let's bring on board our guest for today. We have Khush Bora, who's going to join us on the show, as well as Rajesh Agarwal. A very good morning to you, Rajesh, and welcome aboard, Khush. We will be seeing Khush more often now on Buy Now, Sell Now. So Rajesh, let me first get your take on ITC. You've been shouting on the rooftops of Calcutta that yes, ITC is definitely a buy. This BAT basically coming out and confirming the fact that they're looking to monetize some part of their stake in ITC definitely has actually made the stock a bit jittery. Do you think this sort of a news piece is enough for investors to be jittery of ITC? Do you think this is an overreaction?
Good morning, Cheryl. Good morning, Winnie. Good morning, Bush. You said it right. I have been recommending ITC from my rooftop from the levels of 150, and still I believe that one can buy on any dips for a longer term horizon. The company is doing extremely well, be it hotels, be it FMCG, cigarettes, agriculture, everything is doing well. And the best part is hotels have given the best ever quarter with revenue going up by 18%, PBIT going up by 57%. The overall PAT up went by 11% in this quarter. And they have a focus on craving growth strategy in each business. That's the positive part. Non-FMCG business contribution is scaling up. Cash positive balance sheet. They give good dividends. At what point of time the dividend yield was around 7-8%, and a debt-free company. It's only a market was looking for an excuse to book some profit in ITC, and that came as a news from BAT reducing 4% stake. But as far as mine the thinking goes, that this 4% will be kind of easily absorbed by DIIs and others. So I don't think there would be much of a concern. So any dips in the ITC should be taken as a buying opportunity. 4% stake by BAT, and they are selling just to reduce their debt, not because they have some concerns about the operations of the company. The company is still doing well, and the growth strategy going forward, as pointed out in the analyst meet, is very exciting. I think one should buy if there is a dip due to this news.
Okay, yes. Rajesh also saying this is a buy that comes in on ITC on any dip that you see coming in, and not a concern on that front as well. Kush, good morning, and thank you so much for joining in with us. What's your view on ITC? You know, are you also not too worried about this issue and the overreaction that you're seeing? Is that similar? And what are the trends indicated on the charts as well?
Hi, Vinny. First up, it's a pleasure to be here. Very good morning to Cheryl and Rajesh as well. I think a couple of points lower on ITC, and I'll join Rajesh on his rooftop. That is not an invitation, that is not a self-invitation to come to Kolkata, but, a similar view that I have. Look, let's put things in context, right? I mean, ITC was where about 200 rupees, early 2022. The stock more than doubled. Now, even if we take some money off the table from, the stock, even if it slips a little, it's still actually at the double, still actually a little more than double from where it was just about, a little over a year and a half, almost about 2 years ago. That's a phenomenal kind of a return. Now, what you're looking at is the weekly chart. There is some retracement that is evident, on the charts. What is interesting is that the 30% retracement and the support zones tie in very beautifully at the 390-400 kind of zone. Let me also combine, the daily setup here. On the daily setup, the stock's actually gone into oversold territories, and RSI is at 22. What that is suggesting is that very clearly there is an overreaction on the stock. From here, the risk-reward ratio on the buy side is extremely favorable. So if I take a long position here from positional standpoint, right, a 390 would be my stop loss. And on the upside, we are very easily looking at levels of, let's say, 430 and then perhaps even 450 in the coming weeks or months. So from here a very clear long trend emerges on ITC. From a fundamental perspective, Rajesh has already given a view. From a technical perspective, that ties in beautifully. So all in all, this is making a compelling case for investors to start accumulating ITC if they don't have in their portfolio. And even if they do, I think the worst is perhaps behind us. Maybe a few points here and there, but I think this is a good time to re-enter the stock, even average out. If you've been holding it for a while.
To re-enter the stock. That's a consensus call coming in from both of our experts. No doubt Kush has given the self-invitation, though he's saying not to take it as a self-invitation to go to Calcutta.
Both should also go to Calcutta and eat some yummy food as well. Rajesh, I think we all are, self-inviting ourselves. Kush is not, but me and Cheryl surely are, Rajesh.
I'm sure that Vinny is planning for her next ET now on the go Kolkata edition right here, isn't it? But
absolutely.
Yes, consensus call coming in from both of our experts when it comes to the ITC. Use this dip to actually go ahead and accumulate the stock. But on that note, we'll slip into a break, and if you're planning to buy Tata EV cars, it's going to get cheaper. As you can see the flashes on your screen, Tata EV has gone ahead and reduced the EV prices by up to 1.2 lakh rupees. They passed on battery price reduction to the customers. So that is the headline that we're getting right now, and we slip into a break. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related query. Remember, viewers, you have to write to us on the number that's flashing on your screen. Do remember to mention your name, the stock that you're looking to invest in, mention that name as well. If you have already been invested in the stock, mention the buy price, the quantity, as well as time horizon. In that way, our experts will be able to help you better. And from today onwards, we will be having, or we'll see more of Kush Bora to guide all of your queries on the technical front. And on the fundamental side, today we have Rajesh Agarwal. So let's get started with all the queries that are pouring in. The first one I have got from Rangan. He's writing to us from Chennai, and he wants to know what should he do with 100 shares of Paytm that he's holding in his portfolio. He wants to know whether he should hold or exit, given the fact the stock hit a record low level at this point in time. The buy price would not matter as much. Kush, what's the trajectory looking like for Paytm right now?
Downwards. I think that's a very clear cut answer here. From a technical standpoint, I am actually a little tempted to say that the stock's gone into an oversold territory. Go out and buy and stuff like that, or at least hold. But it's not a convincing move anyway. So the best solution or the best way to trade this would be to exit at current levels. There isn't much on the chart that's suggesting that the stock could rebound, except from a technical perspective that it's got into an oversold territory. Again, given the business news around it, which I'm sure Rajesh will elaborate on, there isn't too much hope that I see on the chart of a rebound. Even if that comes, it will be a dead cat rebound that we saw at about 4 or 5 days ago. So for me, every rise on this is an opportunity to sell. Even at current levels, I would suggest an exit on this very clear.
Okay, let's move on to the next query. And Rajesh, this one is from Pradeep from Kolkata, and they have two stocks. One is Carousel, where they have 50 shares at a price of 637. Another one is Apollo Hospital, 10 shares at a price of 4,872. What's the view on this one? Should they book their profits now, or should they continue to hold this for the long term?
Apollo Hospital is still a buy from our side. We have been given a buy call from very low levels, but still it's a buy from our side, considering the fact that healthcare industry as a whole is doing very well. And Apollo being a market leader with around 10,000 hospitals in 40 odd locations, with reduced debts, can give good numbers going forward. So if there is no need of money at this point of time, one can continue to hold. And for other viewers also, any dip should be taken as an opportunity to buy. As far as Castle is concerned, I think one should book profit at these levels, because the kind of fundamentals, the kind of price run up it has said, it already discounted all the positives on its side. So it's better to book profits at this point of time.
All right, Kush, this one is coming for you from our viewer Vivek, and he wants to know about NBCC. He's purchased the stock at 90 rupees per share. He wants to know what should he do, book out of this counter, or should he average out right now, or stay put with whatever holding he has. He's a long-term investor.
Oh, perfect. Then I think the best way to play this would be with a trailing stop loss. That's our preferred strategy. If you'd be seeing more of me here, you'd be hearing a lot of TSL as well, trailing stop losses. That's one strategy that's played out beautifully across this market rally that we've seen. So from here on, even despite the kind of sharp fall that the stock has seen, over the last couple of sessions, what the good thing is that it's still way above his buying price, which is 90. So my suggestion would be keep a trailing stop loss at 115. Hold on to this stock. There is a recovery that is attempted today. Maybe a little early to call it reversal, but this is a sharp correction after a sharp rise. So it's just the froth that is coming off. On the whole, if you ignore this sharp volatility over the last couple of sessions, I think the stock is in a bit of an uptrend. I think we won't be surprised to see the 150 and 175 levels back on the stock. From a long-term perspective, hold on to this one. But in any case, 115, 110 are very strong support zones. In case the stock were to break that, it could slide further. So best is to take some profit home if it comes to that level. But if it doesn't, then ride the wave again. 150 and 175 could be the levels that the stock could retest in the coming months.
Keeping an eye out on those levels over there. But Rajesh, we have Anand from Bangalore who has a query on Bandhan Bank that despite a decent set of numbers by the company, why has it not performed? Also, how is it looking fundamentally? Because he's holding 1,000 shares at a price of 275 rupees. So should they now actually continue to hold this, or maybe just book out their losses, or what is the exit point that one should look at now?
See, first the question why it hasn't performed after the recent numbers. That's because it has already quite run up quite a lot, and all the positive expectations on the numbers front were already discounted in the prices. And as far as holding is concerned, I think it's a buy at these levels because I think all the negatives which were there because of the Assam connection and all has already been discounted going forward. Any positive news from that side would be a big trigger and hence on our higher side. Asset quality is improving. I think one should buy at these levels for a decent target, maybe 250 to 60 odd levels in the next 1 year or so.
Right. This one is coming for you, Kush, from Samrat, who's writing to us, and he's bought two of the counters 6 months ago. One is Dynamics, 200 shares at a price of 927, and the other is DLF, 300 shares at a price of 345 rupees per share. He has also mentioned he's a long-term investor, but what should he do with both of these counters, given the fact that we've seen sharp run-up in both of them over the last 6 months?
Well, again, if he's a long-term investor, there isn't much to worry. These vagaries, these volatilities are a part of the market. Here too, we're seeing, the froth come off. That's about it. Other than that, there isn't much to worry about. In fact, some of these dips actually could be used as buying opportunities. So if he wants to add further into these names, he could go ahead and do that. BDL is trading at its support zone. So 1550 is actually quite a strong support zone. This is a low that the stock has touched this week, taking support and rebounding from there. So not a bad idea to maybe add some more in this decline. On the whole, the stock is on the rise, and I think from a positional standpoint, 1750 and then 1900 are the two levels that the stock could very easily retest in the coming months. DLF2, there hasn't been such a big dent, right? So maybe it's just some cooling off that we'll see because the stock has actually gone into a bit of an oversold territory, overbought territory. I beg your pardon. But otherwise, here too, the momentum continues. It's strong, on the charts. Some accumulation here too is warranted. A support zone at 795 kind of level. So if it comes closer to that, it's a good idea to maybe accumulate some more. Positionally, 900 plus are the levels that he could look at in the coming months.
Kush, one more query coming your way, and this one is on GMM Pfaudler. Anu from Gurgaon actually said that she's holding GMM Pfaudler and she's making a considerable loss on this one. So should they look to buy more to average it out? They've not mentioned any price, but this is the query.
So, principally, not a big fan of averaging, not a big fan of putting more, bad money behind, or rather good money behind bad money. So from here on, I don't see, too much of a rebound on the charts. Every rise on this stock has been taken as an opportunity to sell. There could be a bounce because of the oversold nature that could take the stock to 1450 kind of territories, about 100 points higher. But again, that could act as a very strong supply zone. If she doesn't really want to book a loss here, then I would suggest 1280 as a very strong stop loss. Any slide below that could take the stock to about 1100 odd levels. Stock has spent a considerable time at those 1450 1420 levels and broken below that. So 1280 is my Lakshman Rekha, so to speak. If that breaks, then the stock could see further cuts. So best is to exit here. If not, then hold with a stop loss of 1280.
Coming to you then, this one is coming from Balan, and he has Asian Paints as well as HLL for 5 years plus, and he's making profits in both of these counters is what he's mentioned. But now he feels that the upside for both of them are restricted. So should he move out of these counters that he's been holding on for the longest time, and should move to Suzlon, Nestle, HPCL, or any other stock that you would advise him to move in?
This is for me?
Yes, for you, Rajesh.
Okay. See, you said it right. Asian Paints has not done anything from the last 1 year or so. It's trading at the same levels, despite the fact that the numbers have been good and the crude price is at around $80 odd dollars is a good news for paint companies. But we should not forget the fact that already the valuations are in 3-digit Ps, and that's the concern, I think. So it's better to book some profits in Asian Paints and move to some other counters like, as you said, BPCL would be a good buy at these levels, because despite the kind of run up it have seen in the recent past, it still can give some kind of upside from these levels, maybe 650, 680 odd levels, but it's quite possible the next 1 year. You can have a look at IRCTC, or you can, the best buy at this point of time from switching from Asian Paints would be HDFC Bank, because with the kind of cut it has seen in the prices, that I think that's unwarranted for given the fact the numbers have been good. Only concern has been from NIM side. And when a bank is ready to post a profit of around 80,000 odd crores in the next financial year with one of the 5 largest bank in the world, I think HDFC Bank can be a very a good long-term bet.
Okay. On that note, we're going to sip into a very short break. Viewers, don't go anywhere. We'll be back with more of your stock-related queries after the break. Welcome back, and you're watching Buy Now, Sell Now on ET Now. Let's keep it going then with all your stock-related queries. Kush, this one is from Hyderabad, from Mali, and they are holding Adani Transmission 300 shares at a price of 1,200. Should they book their losses in Adani Transmission and maybe move to something like Bajaj Finance or Jio Finance at the current price?
Vinny, I'm sorry, for some reason I've not been able to load the chart. So maybe we could circle back to this one if that's all right.
Yeah, sure. Rajesh, do you have a view on this, on Adani Transmission? If the viewer should actually sell Adani Transmission that they're holding at 1,200 and, shift to something like a Bajaj Finance or a Jio Finance?
See, it's a very tricky question, because Bajaj Finance and Jio Finance both are looking very good. At least Jio Finance is looking very exciting for a period of maybe 2-3 years down the line. I won't be surprised when it gives more than 100% return in this period. So one can go long on Jio Financial Service. As far as Adani Transmission is concerned, I agree that the valuations are on a higher side, but still the kind of numbers which they have given in the recent past, I think one can continue to hold. Or maybe you can book a partial profit at this point of time, 50% of your holding, and move that money to Jio Finance.
All right, this one is coming in from Alok, and he has a couple of stocks that he wants advice on. One is ABFRL. His buy price is 235, and EIH, his buy price is 250 rupees per share. He wants to know whether he should stay put with both of these counters for some more returns, or should he look to exit out of them? What's your take coming in on EIH as well as ABFRL, Kush?
So ABFRL is a bit tricky because see, the stock, if I look at it from a moving average perspective, the lines are very clearly indicating that it's on an uptrend, but it's had its fair share of volatility. The higher high formation is very clearly evitable in terms of the peaks that you're seeing, but it's been so volatile that if you ever place a stop loss, it will get triggered. So the suggestion would be to hold it from a positional standpoint for a target of to about 280 kind of levels, but the stop loss here has to be a little deep. A good support zone comes in at about the 200-day moving average, which is close to the 220 mark. So have a deep kind of a stop loss and hold on. The intermediate target on this will be 245. Once that is taken out, we're looking at 280 kind of moves also. But remember, this stock has its fair share of volatility, so that is something that he may have to bear with. As far as EIH is concerned, I think the stock here too has seen a bit of an uptrend. There was a gap up, and that's not sustained. So I think on the way down, there is a very a very easily evitable gap filling process that has occurred. 360 to 365 kind of zones are where I would place my stop loss. If the stock was to breach that, I would exit out of that. If not, continue holding on to EIH, not an issue.
Kush, we have one more query. This one is on Emphasis 2600 call option. Minakshi wants to know your view on this one. For the Feb series, the buy price is 111. What's your view on this?
So for the call option, my suggestion would be to keep a stop loss at about 75 kind of levels. The pattern is very clearly visible, and here is where the technical and the derivative data ties in beautifully. The 2600 call option has a significant base. The stocks made a couple of attempts to breach that, but that's only been on an intraday basis. On the closing basis, the stock has not been able to achieve that successfully. So there's a possibility that the call writers may come in heavy, and the stock could spend time here, and thus the call option premium would keep reducing. So have a stop loss at about 25. 75. If that is taken out, be it today or be it in the coming days, exit out of that. But if somehow, with the market support, with the IT pack moving up, if the stock was able to breach this 26 kind of level, then you'd be looking at 2670 kind of moves on the upside, and then the position could turn profitable. So hold this one with a stop loss of 75. That will be the session.
It's coming from Ryan. He's writing to us from Calicut, and he's holding railway stocks, about 10,000 shares each of RUNL, IRFC, as well as Ircon International. He's sitting very hefty profit of about 70% or so in his portfolio. Now he is confused. Should he go ahead and book entirely out of these counters or wait for election? Given the fact that now we are in the run up to the election, we've seen some sort of volatility creep in almost all of the PSC counters. So let me get a combined view from both Kush as well as Rajesh. Rajesh, first you go ahead with what should his strategy be with our railway stocks, and not only for Ryan, it's a blanket sort of commentary coming in for all of those who are holding railway counters and don't know what to do with the profits they're sitting on.
See, these railway stocks have given phenomenal return. In the last 3-4 months, some of the stock have moved by more than 100%. Despite the fact that the valuation have become overstretched at this point of time, there is optimism all there that railway stocks are going to perform based on the kind of orders they are going to get due to new wagons being introduced, new tracks being laid, modernization of stations and all those things. But one should not forget that valuation is something that has to be looked on, despite the fact that the number of orders is coming in. And when we talk of valuation of almost all of them have become overstretched. One or two companies are there which can be still held, like the likes of Texmaco, Rail, or Jupiter Wagons or IRCTC. Otherwise, I think all of them, there should be some amount of profit booking going forward. So if you're not willing to get out of the entire stock, I would say at least in a staggered way. By staggered, I mean to say that you sell 20% now, and if it moves up by another 5-10%, sell 20% there. So you would not be missing out the entire fun, and still you will be booking some profit.
What's your take coming in on the railway counters? Ryan is sitting on profit. We have a couple of other counters, I beg your pardon, other viewers also who are sitting on hefty profit when it comes to the railway stocks. What's your take on that?
As they say, the higher they go, the harder they fall, right? While that may not be true, in the long term per se, but if you see, mid-Jan onwards, there was a stellar, almost unbelievable kind of a rally in all of these, and it's just that froth coming off. So from my perspective, a lot of these names have seen, extremely oversold, zones in the last couple of days and weeks, and it's just that coming off. From a technical standpoint, the structure doesn't change. A lot of these names have actually come off their 20-day moving average, but none of them have actually breached the 50-day moving average. And I will take that, with both arms open, because the kind of move that the stocks have seen over the last many months and couple of years, the returns are phenomenal. Now, only because of the fall that we've seen over the last week or 10 days, I don't think they warrant an exit completely. So I will align with Rajesh on this one. Not a bad idea to keep some, to rather take some money off the table, to keep booking profits along the way. But they still don't have such a big damage that, would advise, a complete exit out of these names. So similar advice, keep taking money home. And, the current fall should not really be considered as, the end of the story and a complete exit on these stocks.
Okay, that was all about railway stocks. So all the queries answered on the railway front. But let's slip into a very short break. Viewers, don't go anywhere. We'll be back with more of the stock-related queries after the break.
Welcome back. You're watching Buy Now, Sell Now on ET Now. We will continue taking your queries, but in a short while from now on your screen, you will see Prime Minister Modi, who's he is actually traveling to the United Arab Emirates or UAE for an official visit from February 13th to 14th. And apart from that, he will be visiting Qatar as well. The dates for Qatar visit is the 14th and the 15th of February. Remember, this is the 7th visit to the UAE and the 2nd visit to Qatar since 2014. And it's coming at a very crucial point, given the fact that you had Qatar take that landmark decision of setting free the 8 officers as well. So, and also he's visiting the UAE, where he will be actually going ahead to inaugurate the first Hindu Mandir in Abu Dhabi.
Okay, and with that, let's get started with the rapid fire then. And Rajesh, this one is for you. Jaya from Bangalore. They have Finolex cable shares 1,000 and at a price of 1,029 rupees. What should they be doing with this? Maybe sell or continue to stay invested?
Continue to hold.
All right, Samya from Kolkata has Page Industries at levels of around 40,428 rupees per share. What should she do, Kush? Exit out of it or stay put with it, making a loss?
Exit.
Okay, we have the next query, and this one is from Pravinder Singh. They have PI Industries 20 shares at a price of 3,511 rupees, and Sumitomo Chemicals 50 shares at 434 rupees since March 2023. Kush, both these shares, should they continue to hold for the near term?
PI Industries can be held. 3,300 would be the stop loss on that one. Which was the second one? I'm sorry.
The second one is Sumitomo Chemicals.
So Sumitomo is in a bit of a downturn. 370 is a very strict stop loss. So hold, but with a stop loss of 370.
All right, Unichem Labs is a stock, Kush. We have Padmaseva Rao, who's bought it at around 428 rupees per share. What's the near-term target?
So we're looking at 445, and once that is taken, 545, and once that is taken out, 570 as the two targets for Unichem.
Rajesh, Sayak is holding 20 shares of Dixon at a price of 6,470. Should they continue to hold this for a period of 18 months?
Continue to hold.
All right, Rajesh, Senco Gold. How is the future prospect of Senco Gold looking to you? Murali wants to know.
Looking very bright, I would say. Continue to hold.
Kush, we have Vidya, who's a short-term trader, holding 40 shares of Hindalco at 575. Should they continue to hold, or maybe book out their profits, or average it out now?
No, Hindalco is a very clear hold.
All right, let me take one more actually query, and this one is coming from Muni Rajalu, and he wants to know, is it a good time to enter TCPL Packaging and Usha Martin, as well as Anant Raj. There are 3 stocks, but for a period of 5 years, what's your take, Rajesh? It makes sense for him to enter right now?
I think all 3 are avoid for a longer term horizon. You should be looking at better companies for when you invest for long term.
Okay, and that was the last query for today. So thank you so much, Rajesh, as well as Kush, for joining in with us on ET Now as always. And viewers, that's going to be a goodbye from Cheryl, myself, as well as the team who put this show together. Don't go anywhere. Markets at noon will take the action forward.